According to former physicist Niels Bohr, technology has advanced more in the past 30 years than in the previous 2,000. The POS industry, or point of sale industry in particular, is one that has seen a lot of this advancement in the recent years, which is why today my teammates and I will be walking you through the evolution of the POS industry and the growth and popularity behind mobile transactions. POS, also known as point of sale systems, have gone through significant changes, moving towards more simple, seamless, and mobile solutions. Cash registers are now a technology of the past as business owners now focus on greater flexibility and control. With the new changes, the previously humble POS systems can now track sales, inventory, cash flow, and more. The pivot towards mobile technologies and the focus on customer satisfaction and convenience have been two key factors in the evolution of the modern POS system, which you will see in the following slides where I break down the evolution of the POS industry. The origin of POS systems dates back to as far as the late 1870s. The systems were originally developed by Ohio entrepreneur James Ritty. Alongside his brother, he developed the idea of recording cash transactions at his saloon. The result of this was a mechanical device that could track cash transactions and prevent employee theft. The major evolutions of the cash registers occurred in the early 1970s when IBM introduced the first computer-driven cash registers. Its limited functionality remained a major concern among business owners, pushing for more innovations in providing POS solutions. Then in the 1980s, the first credit cards were introduced into society, and the evolution of POS terminals accelerated when they had to be updated in order to suit the business industry. Another major technological breakthrough occurred in 1992 when Martin Goodwin and Bob Henry created the first point-of-sale software. As the software increased in popularity and became readily available, the POS technology continued to evolve consistently. During the Silicon Valley boom, Apple and Windows computer systems made it possible to run POS systems with higher functionality and using new user interface. A New York restaurateur by the name of Jean Moschel uses technology to pioneer a system for his deli. His system would soon become the basis of POS systems for years to come. And as the technology evolved, new features were introduced to boost Mochel's design. The most significant features were the inclusion of touchscreens and graphic elements. By the 2000s, the new POS systems could do more than the traditional POS task. The POS was now integrated with features like financial reports, inventory tracking and management, customer relation management, service management, operation reporting, and payroll modules, and more. The modern-day POS software functions on its ability to integrate. It aims to bridge the gap between online and offline communications. Retailers can now accept credit card payments from anywhere with an internet connection, and customers now have more autonomy over how they want to pay. The POS system has come a long way with great leaps made particularly in the past 2 decades, one of which we will be discussing today, mobile transactions. Mobile payments are regulated transactions that take place digitally through your mobile device. Any interaction between a cell phone and a larger computer mainframe that results in some transfer of money may be considered a mobile transaction. Mobile payments are an increasingly popular way to accept in-person payments because they're secure, fast, and convenient. Mobile payments can be used in a peer-to-peer context, paying at a brick-and-mortar business, or making purchases online. To pay for specific goods or services at the checkout counter, the business would need a specific type of POS device to process the transaction, which Javier will cover as he takes us through how exactly mobile transactions work.
So how do mobile transactions actually work? Tokenization is an important part of mobile transactions. This is the reason why mobile transactions are so secure and prevent fraud from taking place. Tokenization safeguards the bank details in mobile payment apps or digital wallets. How it works. When a credit card is uploaded to a digital wallet, the details are sent to the card's issuing bank. Then the bank replaces your banking details with a series of randomly generated numbers. This is what is known as a token. Then the token is sent back to the payment app or digital wallet and is programmed onto the mobile device. Account details cannot be cloned or used by people who would want to commit fraud, since the details have been replaced with randomized numbers. So, for in store mobile transactions, there are different methods that are used when completing a mobile transaction. However, how it works depends on which mobile transaction method is used. When completing a mobile transaction in a store, the buyer must first have a mobile wallet which is connected to a card or bank account. The store will then need to also have the appropriate payment processor. A mobile transaction can then occur when the buyer holds their mobile device up to the contactless payment terminal. The two devices then communicate with one another by sending encrypted payment information over a specific radio frequency. Then funds leave the buyer's digital wallet and enters the business's point of sale. Now, for peer to peer, another form of mobile transaction that is commonly used is peer to peer payments. A peer to peer mobile transaction occurs when an individual uses their mobile device to transfer money from their bank account to another individual's bank account. This is done via a third party app on a mobile device. Peer to peer mobile transactions use the technology that's embedded into the banking apps. Both parties will need to have the same app downloaded onto their devices. I'll now give it up to Diego, and he'll talk more about peer to peer transactions as well as the international markets.
You're on mute, Diego.
Thank you so much. Peer-to-peer payment systems and their integration to POS. P2P lending systems have rapidly changed point-of-sale systems. As you know, almost all banks have a mobile transfer system. In the US, Zelle being the most common. Peer-to-peer transfer technology allows individuals to instantly transfer money in order to send and receive through a third party app. Cell phone numbers are linked to bank account numbers. This allows cell phone numbers to act as an ID in order to instantly transfer money between two parties. Small businesses rely on P2P payment systems in order to facilitate their merchant services. Examples include mostly service companies in the US and many businesses outside US borders. Accounting firms, lawyers, barbers, nail technicians, etc., prefer the flexibility of transfer payments as they are not required to spend on a POS system. International markets and P2P solutions. In Colombia, Nequi, a transfer payment application developed by Bancolombia, which has become the number one payment solution for all businesses alike. Nequi is widely accepted at grocery stores, airports, taxis, street vendors, etc. All you need is the phone number of the business, and like Excel, you are able to transfer money instantly. Although not common in the US, transfer payments are a great solution in other countries where POS technology sometimes ranges very high. In America, transfer payments are usually more for P2P lending and small businesses who do not have a sophisticated POS system. But there are so many alternatives here in the United States: Cash App, Venmo, Zelle, and Apple Cash. All right, I'll now hand it over.
Thank you, Diego. So some of the mobile payment companies that we'll be discussing are Apple Pay, Samsung Pay, PayPal, and Cash App. First, with Apple Pay, it's a mobile payment and digital wallet service that's exclusive to Apple devices. And as Javier had explained earlier, it uses a tokenization service. So pretty much what it does is it has a specific number for each device during the transaction, and this is a secure way to do the payment process in store and online because Apple Pay does not hold any of the person's personal credit card information and therefore cannot transfer it to the merchandiser. And so some of the other advantages aside its security and privacy is its convenience. And when a person uses Apple Pay at a brick and mortar store, it's a contactless option as well. It also has a no internet feature. So if someone is on an airplane or simply does not have access to data and it's on roaming, the person still has access to their digital wallet and can use their funds accordingly. The only disadvantage, which is slightly minor for Apple Pay, is the adoption. However, 85% of US retailers can support Apple Pay, and some of those retailers include GameStop, Whole Foods, and McDonald's. And the future that we see for Apple Pay is they want to integrate a buy now, pay later feature that is seen in companies like Klarna and Affirm to be able to compete in those markets as well. Another company that is similar to Apple Pay is also Samsung Pay, which is another mobile payment and digital wallet service. They have a similar advantages as Apple Pay, but one that sticks out is they have a reward and cashback option, which is something that we haven't really seen in mobile payment companies because that's a feature that's typically exclusive for banks and their credit card features, but they have integrated that as well. The only disadvantage that Samsung has seen with its competitors like Apple Pay is they do not offer a peer-to-peer feature like Apple Pay, so you cannot transfer funds from one person's account to another person's account with Samsung Pay, as well as they've seen privacy and security issues with their infrastructure. Now, some of the retailers that accept Samsung Pay is the same as Apple Pay, anyone that supports an NFC point of sale system or MST. And some of the retailers that includes is Uber, Office Depot, and Disney Store. And the future that we see for Samsung Pay is that they want to also integrate a interest cash management account, which again is another feature that was exclusive to banks, but then will be available for a digital wallet service. With PayPal, it's a little different. They first started as a multinational online payment system. And many of their advantages was their access to not only a digital phone provider or being exclusive to that digital provider, but also being accessible online as well. So it can be on a Samsung phone, iOS supported device, as well as a web browser. And because of that, it also provides a convenience that many other providers cannot, as well as being secure and private. Now, some of the disadvantages that PayPal does have is transaction fees that it notices with the person having a transaction with a business account, as well as account freezing. Where PayPal is accepted primarily started off as online, but has integrated into in-store to compete with NFC technology. And some of those retailers include Best Buy, Walmart, and IKEA. And the future for PayPal is that the company wants to support cryptocurrencies to be allowed in their digital payment service as well. I will now pass it off to Alejandra to explain the mobile payment company Cash App, as well as the advantages and key points.
Thank you, Dominique. And so how does Cash App work? So with Cash App, you're able to send payments using a recipient's email, phone number, cash tag, or a QR code. And you can see your payments, the payments you've received in an activity feed with notes from the sender. And you can use your balance to send payments as cash, US dollars, stock, or Bitcoin. One of the advantages is it's a free money transfer. And they also have a debit card available for purchases. And then they also have an opportunity to invest in stocks or Bitcoin. Disadvantages that come with Cash App is that they are not FDIC insured. You can't cancel a transaction once it's authorized, and there are limited investing opportunities. Where is Cash App accepted? So the Cash App debit card is accepted anywhere where Visa is accepted, both online and in stores. And then the future of Cash App is to incorporate more services to provide value to both individual sellers or buyers. But Square has a long-term mindset to disrupt people's relationship with money. Advantages and key turning points. So one of the main advantages of the emerging innovations of mobile transactions is the convenience with optionality and selecting a method of payment. Being able to pay digitally using your mobile device versus having to keep track of multiple cards depending on the transaction is a sleek feature embedded into the evolution of mobile transactions. Other advantages to consider are how most major retailers accept some form of mobile payment. This results in increased speed of checking customers out. The process of tokenization eliminates a significant amount of risk in terms of identity or credit card theft. Depending on the mobile payment company of your choice, refined methods of security are rooted within the design. Some mobile payment companies include a multitude of security features, such as requiring a double PIN for use, such as Apple Pay. A key turning point to consider as a trade-off with these modernization techniques is a result of cash being pushed towards an obsolete method of payment. More and more retailers each day are implementing certain pay companies in their POS systems. Some choose to exclude cash as a method of payment. Now I'll be passing it over to Jacob.
Hello, everyone. I'll be talking about the future of mobile pay. Mobile wallets and mobile pay point of sale systems devices will rule the future of mobile payment technologies. Mobile payments are expected to reach about $500 billion by 2024, despite being only $75 billion in 2016. Mobile payment processors in the future will be able to accept a range of payment methods, including cash, conventional cards, and mobile wallets. Near-field communication technology transforms how customers and businesses conduct transactions, removing the need for traditional payment methods. Mobile wallets are one of the most rapidly expanding trends in mobile payment technologies. Consumers like mobile wallets because they are quick, convenient, and secure. Where people can place their money in the multitude of places mean banks are seeing a slight drop in total payments and deposits, and that will only grow as the years go on, as people are able to place their currency into different stores of value. And as you can see from this chart, the U.S. market capital allocation growth rate has reached 33.5% as of 2021. And in terms of the trend, we can see an exponential growth in mobile web payments, mobile payments in general. Now, who will win market share? Who comes out on top with companies competing in the highly competitive fintech mobile payment market? The market will be defined by the range of acceptable payments by a single system: cash, Apple Pay, Samsung Pay, tap, touch, swipe, insert. How many payments can you accept, and how many services are you able to pay with? The more payment systems that are acceptable at stores, both major and minor, the more consumers will be drawn to the business. Convenience is a high priority for customers. There will be a balancing act between major players on the giving payment side and the receiving payment side. On one hand, more businesses sticking to traditional forms of payment, i.e. credit cards and cash, the more pressure payment services will be under to justify consumers utilizing their service. On the other hand, as more businesses adopt multiple forms of payment, the more pressure stores are under to allow multiple methods of payment. It is a matter of timing and understanding the current corporate zeitgeist and surrounding your company. The global market for mobile payments is expected to reach $12.6 trillion by 2027. It would be foolish both for stores and payment system developers to not capitalize on the market and invest properly in staying current. The name of the game is adaptability. Companies that cannot keep up will be left behind. Now, thank you so much to my team members. And if anyone wants to contact them, here are all of their emails. Please reach out to them, and thank you.
Thank you.